All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Thursday, ladies and gentlemen, Thursday, the 19th of June, 2025. So, look, the US market is closed today, but what I wanted to pick up on is on a few data sets, important data sets that came out today, and I just wanted to see what kind of a reaction are we getting right now. So the two data sets were the SNB, the Swiss National Bank interest rate decision, and the Bank of England interest rate decision. So two different banks, slightly different agendas as well. So yes, we'll look into that. But before we go any further, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, like I said, the two central banks delivered their interest rates today. Oh, by the way, also before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. Reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the economic calendar. Actually, so yeah, this morning we got the SNB interest rate decision, and as expected, there was a cut of 25 basis points. So basically, the bank dropped the rate to zero. Let's have a look when we were last time at zero. Let me just get rid of certain things here. So last time we were at zero was back here, back in 2014. So for quite a long period of time, from 2015 up until 2022, we were kind of May 2022, we were below zero. And look at this. I mean, we have moved sharply. We have moved sharply from kind of hitting the area around 1.75, and yep, we're now back at zero. So 1.75 last time, it was back in February of last year, and it took us a while. So in general, I think that yes, the bank is trying to stimulate economy. They're seeing some deflationary pressures in terms of in terms of inflation. Let's have a look what they have. Well, inflation rate actually recently dropped to -10. And that was the May result, the May number that came out in the beginning of June. So the May inflation dropped to -0.1. The previous number was at zero, and well, I think that the bank understands that they have really deflationary pressures. They need to increase spending. They need to kind of boost that economic growth. Last time inflation fell into negative territory was back in March of 2021, ladies and gentlemen. Back in March 2021. Let me just actually open up the chart. So that was on the 3rd of June. Let's have a look very quickly. So 3rd of June, let's see if we have a chart for that. Inflation rate, there we go, -0.1 year-on-year number. So let's have a look at the chart, and there we go. Look at this. I think this will be a little bit of a better visualization. So like I said, yeah, back in March of 2021, we were below zero. And since then, yes, the inflation managed to travel all the way to 3.5% here back in August, and now, yes, we are where we are. Of course, at some point, don't get me wrong, this will reverse back up, but to be honest, something tells me that we could see a few more months actually in the negative territory, unless somehow something will change, unless maybe the price of oil rapidly explodes, to the upside, and then it would just be like a natural move of inflation to the upside here for Switzerland, because again, other inflation around the world would also spike, but Swiss inflation, because it's so much in deflationary territory, it could just catch up, but maybe it would be just still on the modest side, maybe still below 0.5%. Again, speculation. Let's see how, of course, it will go. Yeah. The bank is really trying hard to stimulate and to kind of increase that lending. But okay, we'll see how it goes. But again, for now, I mean, we're seeing that interest rate decision, yes, currently at zero. Question is, can we see a negative rate anytime soon? Maybe during the next meeting. Well, in a way, I'm not really excluding that option. Let me just double check when is the next meeting, if I'll get this number. Um, the September, yes, September 25. So, yes, that's when we'll get the next interest rate decision from the SNB on September only, September 2025. 25. Um, well, September 25, 2025. Yep, there we go. And at the moment, of course, we don't have any forecast, but something tells me that I think that the number could actually go into negative again. For last time, like I said, last time it was in negative territory back here, back in August of 2021. Let me just double check very quickly this. I'm gonna checking other sources very quickly. So yeah, in August it was in August 2022. Last time it was in negative territory. Okay, well, of course. Let's. The question is what is happening with the Swiss franc and how the Swiss franc is reacting to all this. Well, the thing is that yes, we're seeing a little bit of weakness. I mean, well, today we're seeing a little bit of strength in the Swiss franc, but the weakness was coming in before that. So in a way, I think that the market was kind of taking in all the this whole idea that there will be a cut, certainly, which is not very good for the currency. But I think that the market was pricing that in, and it's like buy the rumor, sell the news moment here. So today we're getting the news, and in a way, it's like the Swiss franc is strengthening. Of course, the Swiss franc is also strengthening purely because of the geopolitical tensions. Everybody's jumping into the Swiss franc because it's a safe haven. Also, the U.S. dollar is also a safe haven, but not as a safe haven as a Swiss franc. So, that's where the difference is. I mean, the Swiss franc is actually nowadays like not even like a currency. It's more of a an asset in a way. It's like gold, like where you park your money when the times go bad. So you know that's how we see the Swiss franc right now. Anyway, long story short, for now, looking at this picture, USD CHF, yes, we're seeing a little bit of a rebound, but overall, looking at the technical picture, we still remain below a downside line taken from the highest point of February. Now, yes, we're seeing a little bit of a retracement, but question, I mean, is this going to be sustained by the bulls? That's why my upside scenario kind of comes on a break of this downside line, because any move up until this downside line, it's still for me a bearish indication. This is like a temporary correction before another possible leg of selling. However, I do understand the risks, so that's why I am being very cautious and careful, and I'm waiting for a drop below the 0.8038 40 zone, approximately around there. If I can get that move, then yes, I will consider a lower low, and I'll get a little bit more comfortable with the downside. Long story short, I can say that while we remain in here, I'm just observing the price action. Now, very quickly picking up on Euro CHF, so you can see that it's a little bit more choppy, and the Euro seems to be somewhat, kind of, or is trying to recover here. We understand that the ECB wants to cut more rates in general, and of course that's not in favor of the euro. However, the euro seems to be supported still, and yeah, it's doing okay-ish, I would say, against some of the currencies. But here, overall, you can also say that we're on a downtrend. We're forming something of a possible descending triangle. Overall, so if that's the case, if we are forming something of a descending triangle pattern here, then basically we have ourselves a period until a prolonged period until we can get some sort of like a breakout here, to get ourselves comfortable with one of the sides here. At the moment, I'm taking a very, like I said, conservative approach on this one. If we do push a little bit higher, then I'm keeping an eye on this downside line. If it provides good resistance, then we could see another decline. But if we want to look at some lower levels, I would say a drop below the 0.9220 territory, somewhere around here, would be required, and then we'll go from there. For the upside, a break of this downside line is needed in order to consider some higher levels. Now, jumping into GBP CHF, because this is something I think that's quite relevant today, and you can see that today it's a little bit of a doji forming here. So this is, by the way, daily chart that I'm looking at. So this is like something of a doji. Overall, the pair has also been on a somewhat of a decline here. Well, actually, you know what? Decline, it's difficult to say decline. It's more of a range here since what? Since September, around September 2022. A very choppy range, but still, kind of sideways action here. Look, long story short, I would say if you're looking for some higher levels on this one in the near term, and you know what, I think that it's best to stay with the near term right now, then probably just wait for a push somewhere above the 1.1205, which is the highest point of May, if I'm not mistaken here. Yep, that's the highest point of May. At the same time, we could climb above the EMAs on my daily chart here, and this could open the door to some higher levels. But then don't get way too excited, and this is what I'm saying to the bulls, because we have ourselves a little downside line which could be a little bit here in the way, which is taken from the highest point of May of 2024. So this would be my next target, good target. For the downside, look, ideally, of course, I'm keeping an eye on the current lowest point of June around here near the 1.0926. But to be honest, I think that it's better to just keep an eye on this whole territory right here, this 1.0916, or even better, maybe this is the lowest point of May, near the 1.0975. In general, let's put it this way: 1.09. I think that's the good barrier for the downside here for GBP CHF. But again, with the downside, I'll probably just aim for the lowest point of this year, the current lowest point of this year, near the 1.0610, and then we'll go from there. So that's the kind of game plan. But look, speaking of the pound, we had the interest rate decision today by the UK, by the Bank of England, and well, the interest rate remained the same, unchanged, 4.25. I think the bank is worried. Worried and not, because on one hand you have some sort of certainty kicking in, that they're the only ones who made, like, who signed the deal, who is like somewhat of a deal, somewhat of a trade deal with the US. During the G7 meeting in the beginning of this week, and that's why it's kind of giving that little reassurance that yes, maybe it's not ideal, the deal, but still something, right? And then they can at least kind of bounce off from that. So in a way, that's what gives that little certainty. However, still, inflation remains a big topic. Unemployment remains a big topic, despite inflation coming out yesterday a little bit on the lower side. Those are retail sales. When was that inflation figure? It was on Wednesday, if I'm not mistaken. Wait. Yes, that's what I'm looking at. I'm looking at it a little bit higher. There we go. Inflation came out a little bit on the lower side, so in a way that's good. That's kind of supportive of the of a possible rate cut. But again, the bank is not really in a rush, because inflation has been picking up lately, and yes, after this strong decline, which we saw from the end of 2022 to all the way here to the end of 2024, this the big decline happened. But since then, since kind of September of 2024, it started picking up again, and this is where the bank was kind of worried a little bit. So and that's where right now the bank is, like I said, is worried, and they think that the inflation could travel back up again due to the Middle East tensions, which which are just like I said, it's just crazy to watch what's happening there. When when they're like ignoring everything, any logic there, and just we want to bomb, we'll bomb, So it's anyway. Um, Look, what can I say? All these conflicts, are beneficial for a few. We understand that, so these are beneficial. There are some companies which are benefiting from that, of course. You know, no, but no one's kind of raising this issue. However, either way, look, coming back to the situation with the pound and the BOE, from what we understood, that there were 6 members. Let me just double check, who were in favor of keeping the rate unchanged. Let me just double check. So unchanged 6. Well, there was a forecast that there will be 7, but there's only 6 people. So 3 people were for a cut, because 2 people initially were forecasted to remain with the cut. But yeah, there were more people for a cut. So look, what's happening with the pound, in terms of against the US dollar. You can see that in the beginning of this week, we broke this upside line, we drifted lower. US dollar kind of picked up that safe haven status. Today we saw the pound rebounding a little bit here, kind of picking up strength. However, going further, I doubt that this will remain something of a thing. If things start to escalate, maybe US dollar will pick up in terms of will pick up its safe haven status, and maybe we could see actually this pair drifting a little bit further south, maybe towards this upside line taken from the lowest point of January of 2025. And then we'll go from there. So for now, of course, this move lower could still be classed as a temporary correction before another possible leg of buying. But I think that the bulls should not get their hopes up yet, because maybe we could see a deeper decline later on. And this is where I apply my beloved Fibonacci. And if I do it from the lowest point of this year, the current lowest point of this year, to the current highest point of this year, we can see that, boom, fantastic. 23.6 is exactly on the line here. So talk about beautiful coincidence in a way. And if we do break the 23.6, my next target is the 38.2. And hey, who knows, maybe the 200-day EMA could approach this area and provide fantastic support altogether. So let's see how that's going to play out. So ladies and gentlemen, in terms of interest rates from UK going further, well, I think, look, they have inflation, which kind of slowed down, but in general, inflation still is elevated, still is further away from their 2% target. UK unemployment is still not the kind of the best, in the best situation. We saw, when was that unemployment came out? June. Yeah, June. It was June 10th. Let's have a look. When that came out. June 10th. That was on Tuesday. UK employment change. There we go. And the UK unemployment rate. Let's launch the chart here. So basically, it started picking up and it started moving higher. And in a way, presents a little bit of a risk. And it presents a little bit of a concern for the Bank of England, but of course the Bank of England will continue monitoring it. We could in a way travel back to the levels seen in 2020, when unemployment was around like 5.5%, something like that, 5.3 maybe even. This could, of course, like I said, raise a few concerns, and this is where the bank kind of in a way will have to continue cutting rates to support that. But again, as always, there's a balance. You want to cut rates to support the lending in order for businesses to kind of grow, in order for them to employ more people. But at the same time, if you have suddenly an inflation problem, then yeah, that's the constant battle within. Anyway, ladies and gentlemen, like I said, this is what I'm thinking right now. Let me know in the comments what you think, as always, because it would be great to know. But yeah, I hope you found this useful. Thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye bye.